Investing has become more accessible than ever before, especially in 2026, where digital platforms, financial education, and global market access have opened doors for beginners from all backgrounds. Whether your goal is to build long-term wealth, generate passive income, or simply beat inflation, understanding where to start is crucial. Many new investors feel overwhelmed by the sheer number of options available, from stocks and cryptocurrencies to real estate and bonds. However, the key to successful investing lies not in complexity, but in clarity, discipline, and informed decision-making. This article explores the top 5 investments for beginners in 2026, providing a comprehensive, detailed guide to help you make smart financial choices. Today, we will talk about top 5 investments for beginners in 2026. So, before we start, make sure to hit the like button and subscribe to my channel. The first and perhaps most recommended investment for beginners is index funds. Index funds are a type of mutual fund or exchange-traded fund, ETF, that track a specific market index, such as the S&P 500. These funds are popular because they offer diversification, low costs, and relatively stable returns over time. Instead of trying to pick individual stocks, which can be risky and time-consuming, index funds allow you to invest in a broad range of companies with a single purchase. In 2026, many platforms offer fractional investing, meaning you can start with very small amounts of money. This makes index funds ideal for beginners who want to ease into investing without taking on excessive risk. Additionally, the passive nature of index funds means they require minimal maintenance, making them perfect for those with limited time or experience. The second top investment option is exchange-traded funds, ETFs, beyond traditional index funds. ETFs have grown significantly in popularity due to their flexibility and variety. In 2026, there are ETFs for almost every sector, region, and investment strategy imaginable, including technology, healthcare, renewable energy, and emerging markets. Beginners can use ETFs to tailor their portfolios according to their interests and risk tolerance. For example, if you believe in the future of clean energy, you can invest in ETFs focused on solar or wind power companies. ETFs trade like stocks, meaning you can buy and sell them throughout the day, providing liquidity and control. However, beginners should be cautious not to overcomplicate their portfolios by investing in too many niche ETFs. Starting with a few broad-based ETFs is often the best approach. The third investment to consider is high-yield savings accounts and fixed income instruments, such as bonds. While these may not offer the high returns of stocks or ETFs, they provide stability and security, which are essential for beginners. High-yield savings accounts in 2026 often offer competitive interest rates, allowing your money to grow while remaining easily accessible. Bonds, on the other hand, are essentially loans you give to governments or corporations in exchange for regular interest payments. They are generally less volatile than stocks, making them a good option for risk-averse investors. Including fixed income investments in your portfolio can help balance risk and provide a steady income stream, especially during market downturns. The fourth major investment category for beginners is real estate, which has evolved significantly with the rise of digital platforms. In the past, investing in real estate required large amounts of capital and significant effort. However, in 2026, options such as real estate investment trusts, REITs, and crowdfunding platforms have made it possible to invest in property with relatively small amounts of money. REITs allow you to invest in portfolios of real estate assets, such as residential, commercial, or industrial properties, without having to manage them directly. This provides exposure to the real estate market while maintaining liquidity. Real estate can be an excellent hedge against inflation and a source of passive income through rental yields and property appreciation. The fifth and final investment option for beginners is cryptocurrency, which continues to be a highly debated but potentially rewarding asset class in 2026. Cryptocurrencies like Bitcoin and Ethereum have gained mainstream acceptance, with increasing adoption by institutions and governments. However, they remain highly volatile and speculative, making them a risky choice for beginners. If you decide to invest in cryptocurrency, it is essential to do thorough research and only invest money you can afford to lose. Diversification is key. do not put all your funds into crypto. Instead, consider allocating a small percentage of your portfolio to this asset class as a way to potentially benefit from its growth while minimizing risk. Understanding risk tolerance is a fundamental aspect of investing that beginners must not overlook. Each of the investment options discussed above comes with its own level of risk and potential return. Your risk tolerance depends on factors such as your age, financial goals, income stability, and personal comfort with uncertainty. For example, younger investors with a long time horizon may be more comfortable taking on higher risk in exchange for potentially higher returns. On the other hand, individuals nearing retirement may prefer more conservative investments that prioritize capital preservation. Assessing your risk tolerance honestly will help you build a portfolio that aligns with your goals and reduces the likelihood of making emotional decisions during market fluctuations. Diversification is another critical principle that every beginner should understand. It involves spreading your investments across different asset classes, industries, and geographic regions to reduce risk. The idea is that if one investment performs poorly, others may perform well, balancing out your overall returns. In 2026, diversification is easier than ever thanks to the wide range of investment products available. For example, you can combine index funds, ETFs, bonds, and real estate investments to create a well-rounded portfolio. Avoid putting all your money into a single investment, as this increases your exposure to risk. Technology continues to play a major role in investing, especially for beginners. Robo-advisors, mobile apps, and online brokerage platforms have made it easier than ever to start investing with minimal effort. These tools often provide personalized recommendations based on your goals and risk tolerance, helping you build and manage your portfolio efficiently. While technology can be incredibly helpful, it is still important to understand the basics of investing and not rely solely on automated systems. Patience is perhaps the most underrated quality in investing. Building wealth takes time, and there are no shortcuts. Markets will go through ups and downs, and it is important to stay focused on your long-term goals. Avoid the temptation to react to short-term market movements or chase trends. Instead, stick to your strategy and trust the process. Over time, disciplined and patient investing can lead to significant financial growth. Finally, setting clear financial goals is essential for guiding your investment decisions. Whether you are saving for a house, retirement, or a major purchase, having a clear objective will help you stay motivated and focused. Break your goals into short-term, medium-term, and long-term categories, and align your investments accordingly. This structured approach can make the investing process more manageable and increase your chances of success. The top 5 investments for beginners in 2026, index funds, ETFs, fixed income instruments, real estate, and cryptocurrency, offer a range of opportunities to build wealth and achieve financial independence. By understanding the fundamentals, managing risk, and staying consistent, beginners can navigate the world of investing with confidence. Remember that investing is a journey, not a destination, and the decisions you make today can have a lasting impact on your financial future. If you like this video and would like to see more like it, please give it the thumbs up, leave a comment, and click the button to subscribe.